The summer wind came blowing in from across the sea.
Welcome to Insights. I'm Eric. Thanks for stopping by. We're going to update the economy and stock report in an open and short discussion to introduce people to the concepts of the things we discuss in this report. We usually talk about timing, economic activity, the direction, different philosophies, the difference between the invisible hand, Adam Smith here, versus socialism, Karl Marx here on the right. It really is the difference between everyone acting in their own self-interest. That is the reward that capitalism gets for the benefit of all. It has its flaws, especially as corruption bleeds into the system, but this system over here, which is increasing in dominance and is being taught into incoming generation, is what is going to result in the eventual crash and burn of the West in terms of the economic, the core currency, everything that's out there. But that's a really long discussion. So what we're going to do today is really talk about how we track the invisible hand in terms of economic activity through the economic activity composite, which is located in the matrix. If you subscribe to it, it's in Insights. It's a useful readout of the computer's analysis of all the fractal trends as well as economic activity and everything that's a result of it, cycles that are there as well. We're going to talk about that briefly today as an introduction to that topic to get people an idea of what's really taking place as well as the risks that are at hand. A lot of people think that the Fed is the one that's controlling the game, but in reality it is the invisible hand that's running the show, and some people are thinking that the economic activity is fairly robust and that we will recover very quickly here, but that's another story in terms of when we are tracking what's taking place out in the real world. It's usually a far different story than what is being presented within headlines or mainstream media discussion. So that's the advantage of following the matrix, is objectivity, even though I know that people probably look at this and say this is fake news, and so be it. Let it be fake news. We track what's going on. This is not opinion, and that's what that's what this was all designed to do, to remove us from the majority, to stand with the minority. The minority is the one that thinks independently, and this is just how we do it, at least in terms of economically. Let's remove that picture and take a look at the EAC, which is the economic activity composites. It's broken down into two readings. The blue line is the intermediate version of economic activity. The red line is the longer term one. Currently, the boxes are shaded over the red when the red line drops below the zero line, and these are the major economic contractions. There's different ways we can adjust this, but this is the most simple one that we often present within the matrix and in our discussions. But you can also look and see where the economy is getting to be more and more vulnerable, because the ITCO, which is the faster moving one, is already below the dotted line in the month of June. Now, this will change as some of the data gets updated, and the data is usually not updated by the government. That we find that to be completely useless, to be highly susceptible to revisions and statistical techniques. So we are looking for real-time market indicators, and it needs to be collected. We haven't collected a lot of data so far for June, but we are starting to move down. The intermediate oscillators falling below. It's kind of a death cross or a cross over the two, where you can see where it happens. The blue line crosses below the red, and the red line keeps going up and stays above the dotted line. But you can see we're starting to see some red, and that's important because in the other updates of this report, we've talked about a cycle that's beginning to change in 2024, and you better be ready for it. So don't listen to what they have to say in terms of the economy looks good and everything's robust. We're really moving in the opposite direction, and there's no stopping it. The Fed could cut rates to zero, and there's still going to be no stopping this. You're going to distort the markets, yes, but the invisible hand is what's running the show, and they're telling us that the economy is starting to slowly turn over here in 2024. It won't be long before we have a long, continuous red box here, which is a sign of an economic contraction. It's also, you can see there's different ways to calculate it. Some of the things that we follow that are most sensitive are revenues collected by the federal government, and sometimes the leading taxes withheld is one of the best. But you can see how it turns to 2007, 2000. These are all major turning points. There was one in 2015. There was another one well ahead of the lockdown that took place in 2020. This was in late 2018. The market started to turn, all within cycles, and we're starting to head towards that dotted line. We haven't reached it yet, but there is going to be no stopping this. And we're going to talk about this more in this report. A couple of ideas that we want to present out there, that the invisible hand runs the show. We often cite this in our discussions on our website, whether they be written or verbal or even video related. It does exist. The trick is to learn how to find it. Everything out there is fake news until you learn to parse through it and stop listening to the talking icons, the talking heads. They present only the information that you want, they think you need to know to shape perceptions, but oftentimes you need to know reality, and that's far more difficult because it takes years of experience to really parse through what's bogus and what's actually real. And the EAC is the best indicator of a real economic activity that we could come up with, and we've used it for years. It's shown us all the major problems that are way before they come, and it allows us to get defensive. A lot of times we can confirm this by other things. We have the ITCO and LTCO down there, but let's put a few more things here. Let's pull in the S&P 500. You can see that when we often go red, the S&P 500 goes negative. It doesn't lead, it lags a little bit, and we'll make a few more changes here. You can see how we enter red before, and red boxes come, and then they quickly, and the stock market usually comes down. The red boxes form a little bit of ahead of time, and then the stock market comes down. So that's why we want to pay attention to this. This is going to have more effect than just even the stock market. Stock market's probably going to continue to rally or stay in a rally mode. But then when we finally hit a red box, watch out, and that's what we're going to be talking about more in this report in 2024. We're not due for that. Here's gold. Gold tends to move in opposite directions. It tends to move up and be up. You can see how the up phases when they're in the red box. Other indicators that we often found, we talk about, and we have the cotton report and the commodities report, but here's cotton in particular. It tends to fall before the red boxes or in the red boxes. You can see it often leads them, but some, and let's go back to the other one. It often leads them, but it's definitely fallen below the dotted line first, or with it with extreme amplitude. Cotton's already in a bear phase. That's what it's saying. It's below the dotted line. So it's a real warning that 2024, the economic activity is about ready to hit the fan. I know people won't want to hear that, but it's going to hit the fan in numerous ways. One of the discussions that we've had a lot about is the difference between deflation versus inflation and stagflation. This particular cycle is probably going to be marred with inflation, with declining economic activity, which some people are familiar with that concept of stagflation. Somehow they hear the word inflation and they think, well, that's inflation too, so that's good. Or stock market can rise. Yeah, it can rise sometimes, but it's also extremely painful because people start to lose their jobs, they get unemployed, they have no disposable income, and during the deflation, at least the prices start to drop. But that's just it's just another form of pain. Losing your job and having rising prices or stubborn prices, which is a backdrop of stagflation. People think a depression's worse or a deflationary depression's worse, but this can be just as brutal. It just has a different look to it, and that's what we're going to be talking about in 2024 and 2025, and that's what this report is all about. So stay tuned to this, and if you haven't been involved with the ES report as of yet, I think it's time to consider it in 2024. The EAC, which is down here, and we'll just highlight this again as a thing, as a review. The ITCO, which is the leading arm of it, is starting to just drop below the dotted line. It did so ever so subtly and then pop back up again. But when it does that, especially as the transitional cycle is here now in the window into 2024, this is more than just a heads up like you see right here. This is more likely the beginning of a more continuous box, a box that looks like this, where it's unbroken, where the LTCO drops below the dotted line. It'll have all sorts of effects on lots of markets, probably weigh on the stock market at some point. It's pulling down key commodity, economically sensitive commodities. but unfortunately, it's not going to have the deflationary impact that it probably once had due to the things that are also going on in the world. An endless fighting of war that has an impact as well, but their confidence is starting to be broken, and people don't want to hang out in the paper side of the world too much. We talk about this in the U.S. bond report that we have ongoing. The paper world requires confidence in those institutions, and if they start to falter, people aren't going to park their money and head towards them as a traditional safe haven in this particular cycle. When that happens, everything shifts, and a lot of people hear us talk about turning up to down, and that's why we say that. Things that what that's really saying, and what we mean is things that we once knew as being a part of our understanding of the world, they get flipped upside down, and the world seems to no longer make sense. It's making complete sense. It's just that this time around, the bond market is behaving differently because confidence has changed, and confidence is a big part of economic activity as well, and I'm sure that's why the EAC, which is shown here, is starting to deteriorate, and it's starting to fall below the dotted line. This is likely the first, and it's still not focused. The EAC becomes focused when these two readings, the shorter term one and the longer term one, fall below the dotted line. We haven't achieved that yet, but when it comes in 2024, and it will come, it will be focused, it'll be painful, and people will be screaming all sorts of things and pointing fingers. And the whole point of this is to be prepared for it, not only in the different assets that are tracked in the matrix that are sensitive to it, but also socially, economically, politically. These are all things that we're going to talk about as well. Thanks for dropping by and participating in today's open and free update, and consider going back to the website to review more of the reports that we have. We consider them just as important, whether they be timing of individual assets and more of a discussion and focus about that. But in the end, we are just parsing through what we think is what most people view as fake news, because trust us, there's a lot of it out there. The trick is to know how to stand with the minority rather than majority. Majority will be dangerous when it starts to panic. To do that, you need really good information, and the EAC is one aspect of that good information. It's consistent, it's market driven, it never gets revised, and we're tracking it here in the ES report in 2024. Thanks for stopping by, and thanks for watching, and we'll talk to you again in another update.